Hello, good evening from my time in Nigeria. My name is Pharmacist Jacob Dauda Gwari. I'm a trained pharmacist and a forex trader. Today, I want us to learn on how to use Fibonacci retracement appropriately on trending market. How to use Fibonacci retracement appropriately on trending market. So, Fibonacci retracement is a tool that we can use to identify the level of retracement in the trending market before we place a trade. We can use it alongside other confluences. I will not advise us to use it alone, so it is important that we use it alongside other confluences for accuracy purposes. So let's start with Great Britain pounds versus Japanese yen. Great Britain pounds versus Japanese yen. The first thing we need to do when we are using Fibonacci retracement, we have to ensure that the market is on either uptrend or downtrend. We don't use it when it is consolidated. So we ensure that the market is on either uptrend or downtrend. So from the long time view, you can see that the market is on uptrend. So let's draw our trend line. Let's draw our trend line. This is the origin of the trend. As the beginning of the trend is referred to as the origin of the trend. So we draw it into the future. We extend it into the future like this, on the 4 hour time frame. Then from the 4 hour time frame, we can still draw another trend line here where the first trend line touches it last. We extend it into the future like this, as easy and as simple as this. We just want to ensure that the market is a trending market. So this is an uptrend market. So we go to our 1 hour time frame. We can also go for where to draw our trend line. We want to be accurate enough. So we draw our trend line from here, starting from this origin here. We extend it into the future. We extend it into the future. Extend it into the future. Then we can also go ahead and pull up another trend line from here to we pull it into the future again. Then we can still go ahead. We want to see the relevance. We want to pick the relevant one. So we have to start from the longer one, bringing it closer to the relevant one. So we'll pull this one into the future too. So this is the most relevant one that we'll be interested in. This trend line is the most relevant one that we will be interested in. So the market is on uptrend. So we can now go to 15 minutes time frame to look for entry. So we pick up our Fibonacci retracement tool. Where was the market? Where was the last retracement from here? This is the last retracement from here. We can place our Fibonacci retracement here and move it upward to where the market is at currently. To where the market is at currently. So this is where the market is at currently. So we are expecting the level of the retracement to get to this 50%, this 50% here. Once it touches the 50%, we can place our buy. Once it touches the 50%, we can place our buy. So the level that is of interest for us is the 0.5, that's the 50%, 0.61, that's 61%. So from the 50% downward, these are the level that is of interest for us. So we are expecting the price to retrace up to the 50% before we place our buy. If price did not retrace up to the 50%, then we do not have any business placing any trade. That's the principle behind using Fibonacci retracement. So let's go to the next currency pair, GBP USD. GBP USD. Just like where we analyze the GBP JPY, we go to the 4-hour time frame to look at the long time view of the market. Long time view of the market. Here we can say the market is on downtrend. So we can pick our trend line tool and draw our trend line, pull it down into the future and leave it there. Then we proceed to 1 hour time frame. Proceed to 1 hour time frame. You can see the market is on downtrend. We can also draw another trend line from here, starting from the origin here, where the first trend line touches it last. So we draw it into the future, draw it into the future. In this case, we consider both the candlestick and the wick, both the candlestick and the wick. So we draw it into the future. So you can see the market is on downtrend. Then we go to 15 minutes as day traders to look for our entry. We go to the 15 minutes as day traders to look for our entry. So we now go to our Fibonacci retracement tool and place it here and then bring it down to where the market has gotten into, as far as where the market has gotten into. Then our point of interest from here will be this 50%, 0.5%. So we are expecting the price to get to this level, 0.5%. And if you can see, if we had used if we had used uh, buy order, I mean sell order, the market would have activated our sell. If we had used sell order at this 50%, the market would have activated our sell. So our interest, our point of interest is 0.5, 0.61, this 2 point. But our major point of interest is the 0.5. So we are expected that we'll be expecting that when price retraces back to this 50%, we place our sell. We place our sell. If price, you use this one alongside other confluences, and one of the confluences I'm using here is a trend line. I'm using the trend line as one of the confluences, and I'm also using what we call psychological level as one of the confluences. You can see the psychological level here. So if you use trend line, psychological level, and the Fibonacci retracement tool, you should be able to get um, uh, accurate accurate result. Though, mind you, you should also know as trader that trading is a game of probability. You may not really know the outcome of any trade you are placing, but having the skill set is important because it will give you clarity as to why you are placing your trade, when you should get into the market, and when you should get out of the market. So skills, having the skill set is very important. But then at the same time, we should also know at the back of our mind that we may not know the outcome of the trade. It's just like when you flip a coin and head appear. The next coin you are going to flip, you may not know the outcome of the result. It could still be head, or it could be a tail. So that's how trading is all about. It's a game of probability. If you flip a coin up to 10 times and head appears up to 10 times, that does not mean that the next 11 time will be head or will be tail. So trading is a game of probability. Once we have this mindset, we'll be able to go far in this industry. But if you lack this mindset, it will be difficult for you to succeed. So let's go to the next currency pair. The next currency pair is gold. So we start our analysis as day traders from 4 hour time frame. From the 4 hour time frame, you can see that gold is on downtrend. Gold is on downtrend. So let's draw our trend line. We pick our trend line tool and draw it. Then we go to 1 hour time frame. You can see clearly that gold is on downtrend. There was fake out here, but it's normal. It's just to get liquidity. Then we can also proceed to draw another trend line from here where the previous trend line touches it last. You can see we have drawn accurately another very good trend line from here. Very good one from here. And then we can now proceed to the 15 minutes time frame where we look for our entry. But because it's a downtrend, we now pick our Fibonacci retracement and place it from here and draw it down to the last point where it touches. So our point of interest is where the market will touch at 50%. So our point of interest is on the 50%. You can see if we had placed sell order, the market would have activated us with this week. So 50%, 0.61% is also a point of interest. So this is how to use Fibonacci retracement to place a trade. It's as simple as that. It's as simple as that. So please, if today is your first time coming across my video, kindly subscribe, please. I'm begging you. This is the only thing you can do to help me so that this video can go viral. And whenever I downloaded another video, YouTube can recommend it to you and to as many people as possible. So please, as you watch it, kindly help me and subscribe, like it and share it. Thank you so much and God bless you. Bye.